maybe the axiom should be trade through May and go away. The markets come crashing down. Dow down 280 points. Boom! To the south. My name's Des here at Grok Trade, and we have the Dow down 2.2%. The S&P down 2.3%. NASDAQ down 2.3%. The Russell's down 3.2%. Let me say that again. The Russell is down 3.2%. That is a major drop in small cap. Banks confirming that drop. We had the financials leading the market straight down at 3.45% in the red. VIX spiking up over 18%. Gold, silver up. US dollar slightly up. Crude oil down 2.4%. Boom! Down below all big support areas. So the question is, why? Well, we did have an ADP report come out, and they were thinking we're going to have somewhere around an increase of employment of 145,000 jobs or so, and it came in at around 39,000, I believe. I was golfing all day, so I don't have these numbers committed to memory, so I might stand corrected. However, gang, we had the GDP last week come in at 1.8. Puke, are you kidding? That is horrible, and the markets rallied. Furthermore, we have jobless claims continually increasing, missing estimates, and with that happening, the markets still climb. Consumer sentiment at a 6-month low, the markets still climb. ADP comes out with a report showing a lack of jobs and the markets crash. A lot of people want to pin it to that economic news. Well, let me share with you, and let me be quite blunt here. QE2 is now officially done. And we start off the summer here without that upward wind kind of blowing, having some wind under the wings of the market. It's just not here. It's gone. And we were at a resistance point. And that's what I was sharing with everybody yesterday. Like it or not, technical analysis doesn't lie. If you pull in a lot of people don't understand my trend lines. It's quite simple. Go to a line chart and you can see resistance, resistance, resistance. So it's not science or art or magic by any means. It's simply a correct way of drawing trend lines on a chart. Resistance, we drop. Resistance, we drop. Resistance, we drop. Yesterday's big pop. Anytime you see a big run after an extended up leg on mini-me volume, that's the time to be worried, especially at a resistance point. And sure enough, that's what happened. And fortunate for me, I was out golfing all day today, but I was hedged in the markets. That helps. However, I did miss out on doing a lot of day trading to the south here. So, wow, that round of golf cost me a lot of money. But we're down below 20-day moving average. We're down below the 50-day moving average. We're below the 100-day moving average. Gang, let me go back here and show you this. Last time that we were below it, I mean, we were below a little bit here in March, but we didn't stay below it for very long. But that green line, I mean, the last time we were here is last September. So that is a big, big area that we're closing below right now. But we do have a trend line here, support, support. We have this trend line coming in, but we have a trend, TRIN, up at 4.3% at the close. So there is a very high likelihood of a bounce actually happening, at least at the start off the day. Now, things in motion tend to stay in motion. Down here on the centered oscillator on the MACD, we have a crossover staying below the zero line, heading southbound. So that's going to want to be some continuation to the downside. So if I look here at a weekly chart, you can see that we have the shoulder head and we're just starting to drop, breaking down below a major, major, major trend line and below the 20-week moving average at this moment in the week. We have 2 more days, but it is a short week that we're trading in. But volume did pick up today, gang, on this big drop. So if you are long, let me first say this. Hey, don't freak. You need to be patient with the markets and be sure that you have your safety nets in place. If you haven't already been stopped out of your trades, make sure your stop losses are in place, especially if the markets go below 1300 area. That's an area that we want to be watching. 1305 should be a warning shot. Anything under 1305 right here needs to be a wake up call. And if we get a close below that, or definitely below 1300, markets on the bigger time frame should be just rolling over. It'd be a time not to be bullish in this market. So there you have it. Spread this video on to your friends. Let everybody know what we're seeing here in the market, so no one's out there caught naked and feeling exposed in the markets. We're here to help, and we'll definitely keep you on the right track to what we're seeing here in the technicals on the broad markets. Hey, this coming Monday, I am doing a webinar. It's free. It's a 101 webinar on candlestick reversal patterns. First 100 people, free. Come sign up, and we got plenty of room. Let's see. That will be 9 p.m. Eastern Standard Time. All you have to do is click on calendar there at the website and get signed up for this Monday. Take care and safe trading.